Okay, everybody, welcome to another edition of Unstoppable REI. I'm here with my friend Don Thornton, and Don has some very interesting asset protection and tax saving strategies to share with you. And you also are an investor too, right, Don?
Yeah, 20 years
Okay.
short sale investor.
There. Okay. So this is okay. This guy's got everything. So Don, let's just get going, man. Tell me a little bit about kind of how you got started, what you do. Just your story.
Story is pretty simple.
Okay.
Like most everybody else who has dreams of becoming a real estate investor, I got fired by corporate America. I vowed that I would never work for anyone again the rest of my life.
Okay.
I looked at different options and I thought real estate investing was the best one out there. And I was right. It just took 2 years to do so. But
Right. Right.
eventually I broke through. I decided that I was going to specialize in short sales. Uh, Down here in Florida, there's so many VA and FHA loans out there that it was just a natural fit. And I discovered that I had a knack for it. And
Okay.
so 20 years later, I mean, honestly, consider myself the best short sale investor in the country. I've done at
Nice.
least 2,500 flips, if not more. I mean, I lost track, frankly. Uh,
Wow.
I've
That's
done a lot.
okay. That's a lot. So tell me where the asset protection stuff comes in play.
Well, it was a very humbling experience about a year and a half ago when I realized that I was doing everything wrong.
Okay.
And it's I think that at least in my case, when I broke through, and I broke through big. I went from eating hot dogs, from 7-Eleven on my gas cards to tide me over between money coming in to making almost $1 million in 2004. It was
Wow.
just like boom. I was just, and I kept at it. I mean, I just got better after that.
Okay.
And when you're making a lot of money, you don't pay attention too much about you know whatever you were doing before to make money. You just kept doing it.
Sure.
And I realized that I was just leaking tax money.
Mm.
And i was I was getting so tied down with all the accounting as well, because I was doing land trust LLCs, and I was doing all this convoluted stuff that everybody tells you have to do,
That's
which
right.
I honestly, I think, not to sound like a conspiracy theorist, but there's got to be a movement out there between lawyers and accountants to try to get you to do all that stuff.
I agree.
And I luckily I had a trusted friend and advisor that said, "Look, you're doing it wrong." And he showed me. He sat me down. Actually, it was on a Thanksgiving, and we spent almost 5 hours after we were eating, and he was just explaining everything. I realized, oh my gosh, it's all wrong.
Wow.
100% all wrong. I should have been doing. I don't know how much money I could have saved, but it is what it is, right? So then
Sure.
I said, let me try it. So like I normally do, I just dove in feet first and said, let's do
Yeah.
it. Followed the system, and I was very happy. Last month, in April, when my accountant said, you got no taxes, you don't owe anything,
No taxes.
no taxes at all. It was just like, damn, I couldn't. It was like, wow. And
Okay.
so it was about that time when my mentor said, look, why don't you get out there and tell people? And I said, yes, I agree. And it was I mean, it's a synergy situation because I get to share my experience, and,
Yeah.
and at the same time, I can promote the fact that if anyone out there is looking, who comes up against a upside down house,
Yeah.
they need a short sale, I would gladly partner with anybody who needs that. And obviously, I'm looking to, if anybody wants to come on and do what I've done, I have a webinar, I go through and explain everything. We do financial mapping. And if
Okay.
someone wants to do the same thing, by all means, they can use my services for that as well.
Nice. So tell me, what do you like best about this and what you're offering here? What do you like best about what you do?
I like the fact that I feel like it's revenge against the uber rich, number
Okay.
one.
All right.
I mean, it was shaming for. I pride myself on being a historian.
Okay.
One of my biggest hobbies is reading about history,
Okay.
and it was very humbling to know that I missed it completely, and a lot of people did. That the uber rich, the Rockefellers, J.P. Morgans, they've been using this stuff since the late 1800s.
Wow.
In fact, the Rockefellers, they formed their first beneficial trust in 1914. It's still going on. I
That's
mean,
crazy.
four generations later, 335 family members, one trust. Everything runs through the trust, which is what
Okay.
I do with my business now.
Yeah.
I don't do any land trust or LLCs. I don't have to, because one trust, one EIN number, one tax return. I don't have to worry about capital gains. I don't have to worry about 1031 exchanges, and I get 100% lawsuit proof asset protection as a bonus. I mean,
Right.
I was in on the tax stuff
Sure.
when I heard that it was impossible to penetrate the trust, and that you cannot put a lien against it, or an encumbrance. It was like that's just like, waking up on your honeymoon to your beautiful wife, and realize she cooks well too. It's like, oh,
That's a bonus.
yes.
So okay, so you're speaking some strong language here. Okay, I heard you use the word impossible. I also heard you say that this might not require you to do 1031 exchanges.
Oh, not right. It doesn't.
Okay, so all right, so can you talk a little bit more about that piece? I mean,
Sure,
yeah.
absolutely.
Okay.
And those of you who want to come on my webinar, I go through it all in great detail, and you'll get information about that when we're finished. But
Yes, absolutely.
in a nutshell, there is the beneficial trust that we set up, was set up for me, and we set up for our clients, has tax and asset protection um, capabilities that most trusts don't have. Number
Okay.
one, it's called a spendthrift trust.
Okay.
Spendthrift provision, which means that it's based on contract law, not legislative law. Okay. So this has been taken to the Supreme Court so many times over 100+ years. And every single time the Supreme Court has ruled that it is contract law and it is unviable. So
Wow.
if you have your assets in this trust, it cannot be penetrated. The only way it can be penetrated is with fraud. Now, hopefully,
Okay.
you're not
Right.
doing
Exactly.
bad
Yeah.
things,
Yeah.
but as long as you're obeying the law,
Yeah.
they cannot attach any judgments or any things. And the nice thing is, like I said, in my case, because I'm a short sale investor, and
Right.
you may not have known this yet, but there's a huge, crazy market going on out there, and buyers are desperate.
Yeah.
And so many times that they drop. They drop the sort of a lawsuit, a drop of a hat. Oh,
Sure.
house went to foreclosure. We're suing.
That's right. Sure.
Bank won't extend your short sale agreement. We're suing. And I had, last year I had 3 instances where someone was very interested, and they were going to sue.
Yeah.
And I just said the magic words: well, tell your attorney, that this property is in a spendthrift trust, and he's welcome to try.
Wow.
And that stopped it.
Shut it down.
Shut it down 100%.
Crazy.
My company no longer has any assets.
Okay.
I personally no longer have any assets. The thing is, Rufus, is that people overestimate or overvalue ownership. Control is more important. Control, when you don't have any vulnerability, is the best.
So you think I mean, so why is it so important to real estate investors? I mean, is it the asset protection, or the tax savings, combination of both? I mean, why is it so important?
Like I said, I would have done it for the tax savings alone.
Okay.
But what I like about it is the fact that, the tax savings is such. Like, well, let's look at capital gains. Any buy and hold investor, eventually is going to sell their property.
Right.
You hold something over a year. At some point in time, you're going to say, I want to sell a property. And so what do? You go after that hunt for a similar business, or a similar property.
Right. Sure.
Try to match up as best you can. And it's just a matter of simplification. It's like, you don't have to do that, because any property that's sold that's in this beneficial trust, you can defer all capital gains in perpetuity. Okay, so you never pay the capital gains ever. Okay. You never pay any passive income. So again, buy and hold investors, you're getting paid monthly on your rents. That's passive income. Flows to the trust. There's no all taxes on that passive income is deferred.
That's crazy. So you know what? Can you just? I mean, I obviously had the privilege of meeting with you before. You kind of walked through the scenario. Could you walk through a little bit of the scenario so that people can really, because I mean, you're throwing a lot of terms, some people get it, some people don't, but sometimes, it's just easier to see it in a kind of a
absolutely.
Yeah.
Absolutely.
Okay. Go ahead.
I'll put in the context of what I've done.
Yes, please. There. Sounds
I'm just
good.
an investor. I'm successful, but I'm not, I'm not on stage or anything. I'm not a guru.
Yeah.
I kept my head down for 20 years and just made my money.
Yeah.
So what I did was I sold my personal and my business assets to a trust that was formed with me as the trustee and me as the beneficiary.
Okay.
The trust in return gave me a demand note for the value of the assets.
Okay.
So the assets, the business, and my personal is based on fair market value minus depreciation.
Okay.
That established a value. Now I can pull against that demand note anytime I want if I need cash. But I
Gotcha.
found that I hardly ever need any cash, hardly
Okay.
ever.
Got it.
So now I'm trustee of the trust. This new trust has all of my business assets, but because of the tax advantages, if you don't want to have any taxable events that happen through the beneficial trust, but
Okay.
you've got to make money, right? So
Got
what I
it.
did was
Right.
I formed another trust. This is called the business trust. And
Okay.
so that trust is the one that I'm also a trustee, by the way, also the beneficiary. And so I manage my business through through the business trust. But because the business trust does not have the assets, my beneficial trust leases those assets to the business trust to allow it to use the assets to make money, right?
Right.
Okay.
Sure.
So throughout the year, buy properties, sell properties, flip properties, pay salary, pay
Sure.
expenses, all that thing. So let's say at the end of the year, for me, it would be a bad year, but let's say I made $1.5 million. Okay.
Okay.
So after you go through your normal accounting, you pay your expenses, you take your deductions and so forth. And let's say that at the end of the year, I had $1 million in net income.
Okay.
Right? So the IRS allows the beneficial trust to receive 70% of the business trust net income as a
Okay.
lease payment. Okay.
Gotcha.
So $700,000 now goes back over to the beneficial trust as a lease payment, which, by the way, is considered passive income, which means it's not taxable.
Nice. Okay.
Okay.
Yeah.
So now I've dropped down the net income from $1 million to $300,000. But wait, there's more. My beneficial trust is a 90% limited partner in the business trust, which means that of the remaining $300,000 of the net income, 90% of that is going to go back over to the beneficial trust as a K1 distribution.
Wow.
Okay. Which means now $270,000 is going back over to the business trust, the beneficial trust, which only leaves $30,000 in the business trust. And that's where we calculate the tax liability.
So you had $1 million net
Yes.
that you would have been paying, well, that everybody else would have been paying taxes on.
Yes.
But because of your strategies here,
yes.
you got cut that way down to only $30,000 that you're going to be paying taxes on.
No, yeah, you calculate your tax liability from 30,000.
Oh, that's where you start.
That's where you start. Yes.
That's not okay. Wow, that's even better than what I thought it was.
Yes.
Okay.
Yes.
So now let me see if I understand you correctly. So now you start using your deductions.
No, you use your deductions to get from 1.5 million to 1 million.
Got it. I see. All right. Okay.
You've already established your net income. And so
Got
then you start sending the lease agreement, the payment for lease agreement for the assets over to the beneficial trust, and then the K1 distribution, which was your 90% partnership agreement with the business trust. That goes over, that's $270,000, leaving only $30,000, which is what you start calculating what you owe the IRS.
That's crazy. So what would you estimate is the percentage of real estate investors out there that know about this?
Maybe 0.00052.
That is crazy.
I didn't know about it, and I thought that I was pretty up on this stuff. And my accountant for 20 years never told me about it. I've got friends that are in this, never heard about it.
Well, you said that the Spendthrift Trust has been around since the 1800s, right?
Well, you know what? I can only come to the conclusion that they didn't want this out there to the masses, and it's not to the masses. I mean, let's face it. If you're just starting out and you're wholesaling a couple deals a year, you don't want this. It's not
for you. Got it. Yeah.
But the fact is that it's only now in the last maybe year or so is it really starting to gain momentum.
Okay.
And frankly, this is one of the reasons why I jumped on this so much, because I saw the opportunity
That's
to get
crazy.
this out there to the real estate investing community and say, look, you're doing it wrong.
So
And
go ahead. I'm sorry. Go ahead.
please.
Oh, I was just going to ask. You mentioned who it's not for. Who is it for? I mean, what is the sort of the perfect scenario, the perfect client for you?
I would say that if you are a buy and hold investor and you
Okay.
have rents coming in and you have, I don't know, there's no arbitrary amount of doors that you have that you
Yeah.
want
Yeah.
that would make sense to do. It just depends on a lot of issues.
Okay.
But I would say that you need to be serious about it. You need to have some serious cash flow coming in,
Okay.
uh, for one thing. If you're a flipper like I am, I mean, I was flipping 40 to 50, 80 properties a year for years.
Okay.
And so that's a lot of money coming through the till
Sure.
as well. So yeah, but I mean, it just depends on, and it may, for somebody, it may, they may not, they say, man, I'm okay with the taxes, but man, I'm carrying such high liability insurance policies, because I don't
Yeah.
want someone doing a slip and falls, or a contractor falls off a ladder and then I'm they're going to sue me. It depends on what people's priorities are. For me, it
Sure.
was the fact that I got rid of my $2 million liability policy, which was
Okay.
nice. And
Yes.
of course the tax savings was great, so that was for me the clincher.
No, that's huge. And right, so everybody's situation is different, but definitely this is not for a newbie
No, no,
investor.
not
This
me.
is for somebody who's making some money, who's
Yes.
probably paying quite a bit in taxes, wants to save some money in
Yes.
taxes.
Yes.
Yeah, and is doing a pretty significant amount of business, right?
Yeah. And remember, it's not just business, it's also your personal as
Oh,
well.
gotcha. Okay, okay,
So it's all in the same thing. And I mean, I would say that buy and hold investors are probably more quick to see the value,
okay,
because when you tell them, hey, by the way, all your rents are it will not be taxable income. What?
okay.
Yeah. It's
That's
not
huge.
passive. It's passive income. In this strategy, passive income is not taxed. Well, it's taxed, but it's deferred in perpetuity.
Sure. That's crazy. So let me
Yeah.
ask you this. So obviously, do you have many clients that you're working with right now?
You know what? We went to Vegas in April,
Yeah.
and we went to a non-real estate event.
Okay.
It was an event that was designed to teach people how to put together investment funds.
Got it.
So I mean, you're gonna find this funny. I went there with a T-shirt, a black T-shirt with white lettering. It says, "I don't pay capital gains." On the back, it said F star 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 the IRS.
Okay. People were standing in line. Go ahead.
I
I'm good.
felt like I was the hottest woman, in an all male school. Okay.
Okay.
To tell you, they were coming. I spent most of my time outside the hall where they were doing the lectures, because everybody wanted to know. I
What's
mean,
the
I would
deal?
say
Yeah.
my partner and I came back with 50 clients.
Wow.
Yes.
Wow. That's
Yes.
crazy. So
Mhm.
so the point that I was trying to make, and that's crazy. What is the I guess a result that you got from one of your clients that maybe you weren't expecting? Is there anything that happened that maybe you weren't expecting?
You know, for me, the reaction was something that I wasn't expecting.
Okay.
I was, I kind of logically knew that I saw the value,
Yeah.
but there was this lingering doubt. Well, the really, really rich people, the guys going there to put these 10, 20, 30, $50 million investment funds together,
Yeah.
surely they know, and sorry for calling you Shirley, but they, you know, surely they would know.
Yeah, but they don't.
They don't, they didn't.
That
Over
is
the,
so crazy that it's okay.
yes,
That it's out
yes.
there. Nobody knows about it. All right. So
I mean, I'll just give you an example.
yeah,
Okay,
go ahead.
an investor in Houston. He's just killing it with Airbnbs,
Okay.
killing it. Okay, and we made contact with him at a different event like a couple of months before, and now we met him like a week ago,
Okay.
and he's just like, he's got his wife coming on board to do this, and he's telling everybody. He's just sending all these people because
Wow.
he realized that he was just, he's making too much money, and he didn't want it, and all those Airbnb passive income, no
Yeah.
taxes, so it's like boom.
That is crazy. So, and the fact that it's been out there but nobody knows about it, so it's like a secret hidden in plain sight.
Yes.
So how can people get a hold of you, man? What do they need to do? How do they reach out to you?
Well, what you want to do is, I do a webinar every Thursday night at 7 o'clock Eastern.
Okay.
You can go to you go to my website, which is https colon slash slash, and this is going to be a hard one to remember,
Okay.
to hell with the IRS.
So yeah, why did you pick something so
.com.
difficult to come up with? Nobody will even remember that. And by the way, can you please send me all those links? Because I want to make sure I post them in
Absolutely.
these. Okay, cool.
Absolutely. Yeah. So
All
you can
right.
go there. It tells a little bit about what we do. And then there's also a link saying, register for my webinar. The webinar will go into much more greater detail about how this
Sure.
works. And then you can set up a phone call. We can go over how this would work for you. And if it's a good fit, then we can get
Yeah.
you onboarded.
Nice. So is there, just to wrap this up, is there anything that I should have asked that I didn't ask you? I mean, is there something that you need to let people know that we didn't talk about yet? I mean, what did I miss?
I would say that you're going to get resistance from accountants and attorneys
Of course.
because it puts them out of business.
Of course. Yeah. Yeah. Yeah.
And just because it's always done a certain way doesn't mean that's the way it should be done.
Right.
And I'm telling you, you never, ever should have to use an LLC or a land trust again, ever.
And
You
man,
should
this is
never.
like what do we call it? Conspiracy theory you're throwing out here, man. I mean, this is like uh people's bread and butter. I mean, it's certainly but anyway, it's just crazy that's out there
Yeah,
and people don't know about it. And
right.
so how quickly, I mean, so okay, you don't go to your tax attorney or your or accountant to ask about this. How quickly can they know whether this is going to work for them? I mean, they come to you, you go through the
Come to the
phone call.
webinar.
Okay.
Come to the webinar. If you feel like it's a good fit, it's worth talking about, that we can set up a consultation.
Okay.
Then we'll even set you up with a consultation with our trust, our expert at
Okay.
corporate, someone who's been doing this for 30 years,
Okay.
and answer all your questions and look at what your business is doing. And
Sure.
then when you say come on board, 30 days, you can have everything set up.
Got it.
Yeah.
That's fantastic. Well, man, I appreciate your time. This obviously is something that's going to take the world by storm. Remember me. You'll still take my calls.
Oh, absolutely. Absolutely. I want
uh,
you to be my biggest cheerleader.
Hey,
So
whatever I can do. I need to get some of those T-shirts,
absolutely.
and you should sell them. But yeah, thanks for your time, man. I appreciate it. And but I certainly don't want this to be the last time we talk. So let's talk again soon, and keep me posted on the progress and whatever I can do to help, man. I'm all over it.
I
Okay.
appreciate it, Rivers. Thank you very much.
Okay. You bet.
Appreciate
Take
having me
care
on.
now. All right. Bye now.